This is Scott Becker with the Becker Private Equity and Business Podcast. Today's discussion is one that is front and center for so many of us. Volatility should lead to sharpening your allocation of stocks and bonds. So the key concept today is volatility is sort of a real lesson to all of us. When things are going down, we want to be in a spot where we've got an allocation of stocks to treasuries, stocks to bonds, in such a spot that we're pretty comfortable with it, so we don't panic when things are going down. So we don't have to sell the dip, so to speak. The same thing, when things are going up, we can't push ourselves to so high an allocation of stocks versus bonds that we then have to reverse course when things go in the wrong direction. So the core lesson today is volatility should be a real lesson for all of us in how we can manage our allocation of our portfolio, stocks versus bonds, and how we sort of balance those out. The lesson should be, what are our core investments? What are our core allocation? And we've got to be able to live with that in times when the market's going up, in times when the market is going down. That's the core lesson today on the Becker Private Equity and Business Podcast, that volatility should lead to a sharpening of allocation principles and an understanding of your allocation concepts. Thank you for listening to the Becker Private Equity and Business Podcast. And it's not so much you should change things this moment, but you want to really be thinking about what's our allocation and does it make sense for me in good times and bad times, when the market's going up, when the market's going down. So I don't have to panic when it's going down, and I could win some when the market's going up. Thank you for listening to the Becker Private Equity and Business Podcast, and thank you to our wonderful producer, Chanel Bunger. And of course, at any time, text me with comments or ideas, 773-766-5322. Thank you.